Hi, everyone, and welcome to Analyze Your Trade, episode number 30 for April 10th, 2018. Tonight, we will be discussing your trade ideas, and over the last few days, about 50 people submitted up to 5 symbols each, and I've put the list together, which you should see on your screen while I'm talking right now. My name is David Kosmeter. I'm the creator of Timing Research, and I developed this show with Dean Jenkins of Follow Me Trades, and he is here to moderate tonight, so I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David. And it's good to be back for episode number 30. Man, we got some history behind us now. Got a regular pattern going. And we got a couple good guests, Larry and Oliver. And we got super interesting times in the market. Volatility continues. And so it'll be fun to look at some trades here. I see that we've got Facebook on our list, and that should be interesting. I know I'm not surprised people are interested in it with Mr. Zuckerberg testifying in front of Congress as we speak. And I was listening in on that while I was driving. Pretty interesting discussion. So let's go ahead and get started with our panelists. If you guys would just give a quick 1-2 minute introduction of yourself, really what your focus is, what your business is. And we'll start with you, Larry.
Oh, thanks for having me here again today, David and Dean. And so I've got a trading educational site called PowerCycleTrading.com. I've been actively trading for over 30 years and ran a large oil trading, international trading group for many years. So a lot of background in trading commodities and equities and a lot of different things. But our primary focus is directional trading based on trading models that we've developed, and then using options for risk management and better leverage on the trades. So that's what we're all about. So come visit the site, PowerCycleTrading.com.
All right. Directional trading and options. You got my attention. That's what I'm into too. But Oliver, if you'd do a quick intro for yourself.
Yeah, great being on the show again. Thanks for continuing to invite me, Dave and Dean. Excited to be here. A little bit about my background. So I'm Oliver Schmalholz, as you might hear from my accent, originally from Germany. Now I live in Scottsdale, Arizona. And I developed a news-based approach over 10 years now that I've been following the same strategy here, and what worked 10 years ago still works today. So it's holding up over a very, very long time here. And what we do is we analyze the impact of news on US stocks. We got over 12 million historic trades in our database that we perfectly align up with the exact same tick when the event occurred. And then we got all kinds of processing and tagging and artificial intelligence and machine learning built in and utilize that information on new news events that come out and turn that into signals for investors to profit from up and down moves after news events. So thanks again for having me.
Okay, it's good to have you here. I think your technology is really, really cool. So I think you got something really interesting going on there. We've talked in the past about the possibility of combining news events with technical analysis, and we just may have to dig deeper on that one of these days.
And every time I'm on the show, I tell you, let's schedule a call. So as we hang up after this call, why don't we get something on our calendars very soon? And I think it could be a powerful combo.
Absolutely. Absolutely. So I'm Dean Jenkins, founder of FollowMeTrades.com. I'm a technical trader, and I trade directionally as well. I'm looking for an initial impulsive move, a correction, or a continuation of the original trend. And if that sounds a little bit like Elliott Wave, it is. Very simple, repeatable approach. And I combine it with Ichimoku Cloud. So I call it East meets West, and it's a pretty powerful trade setup. Two independent systems, and when they agree, the results are pretty good. I run a stock pick advisory service. I have a live trading room, and then I offer some education courses and some mentoring. And I like looking at charts, so this is a fun show. And you never know, it might just uncover the next big gem or remind us of a stock we should be looking at. So let's go ahead and jump into it. Let's do some charts here, and let's see what we got going on. And of course, what the, each panelist is going to bring a little different analysis technique and a different approach to trading. So that's really valuable to get some, different perspectives on trades. And boy, if we all agree on them, you guys should probably take notes on that. But let's go ahead and jump into the list. And first up is J.P. Morgan. And so we'll keep that original order of Larry, Oliver, Dean. And so, Larry, if you want to lead off on JPM, tell us what you see going on there.
Yeah. So first off, I like to look at, kind of look at what I call top-down kind of analysis of whatever I'm looking at, any stocks, broad markets in general. So combination of weekly, daily, and then I'll break it down to a lower time frame, 30-minute, 4-hour, 1 hour. But if we just look at JP Morgan here from a weekly standpoint, which is kind of the long-term time frame, it's had a pretty good pullback with everything else, but you can see it's pushed back up here, and it's back to some major moving averages and starting to push back above this weekly 8 exponential moving average. And then you can see over here on the daily time frame, it's also starting to push back above these moving averages. So down below here, these are momentum-based indicators. So it measures momentum as far as price momentum. And we're starting to get some positive momentum. Now, so, if we didn't have earnings coming up, the earnings should be actually really good. So the market's probably expecting great earnings. And if it's not, up to expectations, that you could get a sell-off, but this technically looks pretty good. The only thing holding it back here was we've got this 50 simple moving average, but it's starting to look pretty decent for a potential upside push just based on the chart pattern and momentum. This is a 4-hour time frame, and we have what we call a volatility squeeze. When we get a real coiling price action, a lot of times that leads to very explosive big moves up or down. And then we'll look to momentum to tell us what direction that move would be. And so if I look down below at momentum, we can measure multiple time frames of momentum. But right now I'm seeing, positive momentum on my cycle 1 and 2 indicator. So it looks good to the upside. We've got some resistance here at, call it 113, 114. If it gets through that, then, back up, put in your Fibonacci levels, it probably get back up here to this 116 level pretty fast.
All right, so conditionally bullish on JPM, it sounds like, right?
Correct.
All right. Oliver, what do you got?
We got if you look here the past 3 months, I've been in this trading range here within like a $10 range here, and the last quarterly earnings here, January 12th, had a miss. Stock went up 1.5% on that day. Let's see what the volume impact was here. Let's see. Yeah, see 166%. That's pretty low for a earnings volume. What we do here is we measure it to the normalized volume compared to the 5 preceding days. And that includes the extended hours. Nobody else does anything similar. If something comes out in the extended hours, especially in the after-hour session, then to measure the carryover into the next following key trading session from the 9:30 to 4 p.m. So that was a pretty lousy impact after the last earnings event, and everybody is. Looks like if you look at this chart here, and then if you look at what kind of other news occurred, if you see analyst actions, all of it a low impact. SEC filings here, all of it a low impact. There's no major catalyst here that would tell me after we got the next earnings event out of the way, jump in right now from a news point of view. Holding pattern.
All right. And I am showing JP Morgan on my chart with my indicators. And again, I use a very simple, repeatable approach to Elliott wave. And I show a momentum indicator. And I've got the Ichimoku cloud on here and the 200 simple moving average. So on my chart, JP Morgan's been in a long impulsive move starting in October of 16. and it looks like it's losing some momentum. We've got actually negative on the price oscillator, and we've got some minor lower low, lower highs. We're down beneath the cloud. We're just getting into it. So that's a potential resistance area as it goes. Once it got under the cloud, trying to get back through it can be resistance. And I think Larry had called out a similar level, 113, 114. We would want to see it break before we would expect to see more highs coming. And it could reverse at any point. And if it takes out this low, then we've got a bigger pattern of, lower low, lower high, new lows being put in. And that could indicate the beginning of a correction. And we just use a Fibonacci retracement for this impulsive move. And that would take us down 95 to 80. But that has not been proven. We would have to get down and put in a new low here at about 105. So for me, it's in between, no long trade, no short trade. I probably wouldn't be going long if it breaks. I don't, we're very mature into this trend, about a year and a half into this uptrend. So I would, my next trade would be down, but it's nowhere close to qualifying for that. So that's my look on JPM. And next up is Seagate, STX. So where do you think there, Larry, on Seagate?
Yeah, let's take a look here. Well, it had a really big move today. It tried to break out to the upside and failed. So that's not a very good looking pattern right there when you have that kind of failure. So if we look here at Seagate, I'm trying to zoom out a little bit or zoom in here. So if we look at Seagate, it's holding support right here on a long-term basis, right through here at about 56.5. This is the 8 exponential moving average. So trying to hold support here, you can see it. And then today it really had that gap up and pushed higher, but then failed and sold straight off. So that's a really ugly tail there in that pattern. And you can see that on the 30-minute time frame here. You can see that this is an opening range high and low, and you can see how it sold off into the close. So that's not a very good looking pattern. I could see this easily pulling back down in here to fill this gap, come down to this level here into about 57, 58, see if it can hold support, and then regroup, see what it wants to do. But you can also see down here, my cycle 1 and 2 indicators are negative. So not a very good finish to the day for Seagate. I would not be trading this long or short right now. Just let it see if it can pull back down here and fill the gap. So kind of a no trade.
All right, no trade on Seagate. Oliver, what do you think?
Okay, yeah, let's look at the news here. And if you look at the last quarterly earnings, beat, but a pretty small price change here on the event day, just 0.3%. And if you pull it up volume-wise, it did have more than double the usual volume. 9.47% since then, but not a whole lot on the actual day of the announcement. But what's actually our last buy signal here was a Morgan Stanley. That was an upgrade that was triggered on the 9th of April. Let me just pull it up here. Stock is up 5.38% since then. And obviously got 2 more weeks here, 2.5 weeks before the next earnings event, but that had a pretty common 3.5 times usual volume impact, up almost 4% that day, and then now another 1.4%. So that was the last buy signal, and could still, follow through a little bit more on the upside here until we see the next major event, which will be the earnings event coming up.
All right. So nothing for you right now, it sounds like.
Right now, no, nothing triggered today.
Okay. So pretty interesting looking at Seagate here. It has completed a 5-wave sequence. So this is all 3. This is a perfect correction 4, and then it did a continuation of that original trend. And I'm just curious, I'm going to put Fibonacci retracement lines on, check that wave 4. It was perfect right into these blue lines, this Fibonacci retracement zone. And after that, what we try to look for is the continuation and get a target using Fibonacci extensions, and you can see between these green lines, it went right into that expected target zone. So this is kind of over, right? It already did a 5-wave sequence. And for me, the trade would have been back here as it started wave 5, as it broke above the cloud at about 37 would have been a nice trade. Wish I'd been looking at it then. But the fact that it failed today, even with that gap up and failed at that prior high, and we can see the momentum indicator is losing momentum even as the uptrend continued. I think it's over. And the next move is typically an ABC kind of correction in the opposite direction. And I don't try and trade those ABCs. I do the major impulse correction continuation waves. So nothing here for me is the short answer. I wouldn't be trading STX in the near term. All right, next up, everybody's getting sitting up in their seat now. We're gonna take a look at Facebook, and it's been volatile, that's for sure. And big move today, 4.1% as Mr. Zuckerberg is giving his testimony. So, Larry, what do you got on Facebook?
Yeah, so Facebook, yeah, everybody's been following Facebook, but we've had obviously a big move down. We've established some support levels down here, to the 150 level. Now, when we look at the daily time frame, let me pull up a different series of charts. When we look at the daily and then drop down to lower time frames like 4 hour, 30-minute, you can see that the momentum has shifted back up here, and we just finally got through this 382 retracement level from this prior swing high back in March to the low. So got through that, pushed through this 21 exponential moving average. I'm looking for a push back up here towards this 170 level, 170 to up here to this 200-day moving average, 170, 173. We've also got here on the 4 hour time frame, this is what we call a volatility squeeze, where these dots, you can see how price is really coiled. And so we just had a trigger today on a volatility squeeze on the 60-minute. You can see how it exploded out of there on the 30-minute and the 60-minute time frame. We've got a 4 hour squeeze and a weekly squeeze. So looking for a continuation for momentum to push back up. We'll have first resistance right here, 50% retracement, 167, which we're close to, and then potentially to 170, 173. And, this is a trade. I'm not, these are trades. These could last 1 or 2 or 3 days, kind of swing trades.
All right. Oliver, I'll bet there's some news on Facebook, huh?
Oh, yeah, absolutely. And the interesting thing here is, so if you look at that CNBC, Zuckerberg's comment, FTC didn't notify the FTC of leak here. There's some pretty big volume impact, but the price change is actually pretty trivial, what we're seeing here. So if you go back into, let me just pull up here the biggest. So on the 28th of March, we saw a couple longs here. I mean, there's a lot of news right now coming out pretty much every day. Some new event here. The market watch, I would say they don't have a lot of volume impact here. If we sort by the biggest volume impacts here, 29th of March, 4th of today is actually in the past months the second biggest impact day. What's different compared to the 29th of March, you had a big follow through right after the news came out with a big price change. Now on this testimony thing, we're seeing big volume, but hardly any price change here. So I think most of the downside is already gone, and I think there's room to go back up into the next earnings.
Okay. So I'm showing my chart on Facebook here, and interesting, I was listening to Larry's potential resistance areas, and they're pretty much identical to mine. And so I'm watching the 200, which is going to intersect the Ichimoku cloud here in another price bar or two. And so that 173 level is a key resistance level. And if it breaks through that, we're probably going to go on to new highs. If it reverses off of that, we're probably going to be deeper into this retracement zone, take another low down probably below 150. So I'll be watching for that. That could be tradable, but we're not there yet. And, you know, on so many of our trades and so much of the market right now, I could say that, you know, boy, there's something about to happen here long, something to happen here short, but not quite there yet. We're finding an awful lot of trades like that. So several that we were just watching and waiting for, you know, the final trigger, the setup, some kind of catalyzing event. But that was a long way of saying no trade on Facebook yet, but there could be an interesting one, long or short, based on that key 173 level. What happens there?
I have a quick comment too. If anyone watching wants to hear some more about Facebook, we talked about it for quite a while on yesterday's episode of CFN. So if anyone wants to do TimingResearch.com and scroll down, and you can see yesterday's episode. That was CFN number 177.
All right. Yeah, everybody's talking about Facebook, right? It's headline news right now.
Yeah, definitely.
Yeah. And again, I was just driving home getting ready for this, and I listened to some of the testimony, and it was pretty interesting. All right, BAC, Bank of America. Shifting sectors here. Go over to the financial sector and see what we got going on here. And you're up, Larry.
Okay. So with Bank of America, we're coming into earnings season here. So the way I look at stocks as they approach an earnings release date, I look at, trades into an earnings release. So we've got earnings coming out here on the 16th. All right. So this, you can see just from the weekly time frame, we're into a moving average resistance here of the 8 exponential. We've got a 50% retracement here at 30.89, and the 618 comes in here about 31. So, potentially could get push up here to 31.5 right here with, the strength of this week. If we don't have negative headlines, I could see this pushing up just as a short-term kind of retracement rally into this 50 moving average here on the daily. And also the 618 right there at 31, call it 31.5. So not a big mover up, but I mean, it has potential to push up. And this is basically just what we would call a retracement short covering rally, but enough to push it up into here. So not anything I'd be too aggressive on trading, but we've also, you can see here again, we've got another volatility squeeze here on the 4-hour. So a lot of these charts look very, very similar. They're poised to have potentially a little bit more momentum to the upside from short covering, but these things could quickly fade if you get more negative headlines. But right now, just looking at the charts in Fibonacci, we could get a push up here to about 31.30, that level.
Okay, and Oliver, what news have we?
Well, the last big thing we had there was on the 24th of March here, that $42 million settlement. Thomson Reuters broke that one, and that was with the New York Attorney General over that fraudulent masking scheme. And it's interesting how the stock, jumped over 4% that day. But if you look at, again, the volume impact here, just a 4.6% higher impact. And that's why you're not seeing a whole lot of, follow through here after that news. Typically, if you would see both a volume, a great volume impact and the price move, it would extend the move. So I would agree with Larry here that the market is waiting for the next earnings event here, which is going to come out in 2 weeks from now. And if you look at the last earnings here, Let me just pull that up here on the 17th of January. Stock down 3.43% since then, 1.1 on the day, and yeah, on 186% of the volume. That's also on the lighter side. And you can see here was a bigger drop, and then, you know, reversion to the mean, which you see a lot of times unless it's a strong both volume and price move.
Okay. So waiting on earnings.
Waiting on earnings, yeah. There will be an exciting earnings season here coming up.
So I'm showing Bank of America. It finished 5 waves as well. There's, you know, the ones that matter. There's 3, there's 4, there's 5, right into the target zone. And what's interesting is what's going on with current price. So, you know, an uptrend is defined by higher highs, higher lows, higher highs, higher lows, higher highs. We took out a previous low here. This is a pretty big move down. And now we broke through the Ichimoku cloud convincingly. And so what I'm watching is, you know, price is heading up, and I want to see if it reverses off here and puts in a new low. That's the definition of a change in trend from higher highs, higher highs to low, lower, high, new lows. And if it does that, then we might have the beginning of a pretty good sized downtrend beginning, and earnings very well could be the catalyst for that to happen. Now, if it does break through the cloud on the new highs, then that's what it is. But you know, I think if it reverses here, that's something to really watch for. And it may consolidate until earnings come out, you know. But if it reverses and puts in a new low below here, then we got a downtrend going on. That's what it looks like from a purely technical standpoint on my chart. All right, next up is Walmart.
All righty, let's take a look.
What we got here on Walmart, huh?
Yeah, let me pull up a longer term chart here.
Go ahead when you're ready, Larry.
All right. Okay, so, you know, Walmart doesn't look too good here. Here's a monthly time frame. I kind of call that the macro time frame. And then we've got the weekly next to it, long term, and then the daily, medium term. So if you look down just from this big macro picture, it's had a huge sell-off. All right, so it's still here just churning on these lows. So I've been looking at this one for a couple of weeks here. And if it starts breaking this 85 level into a closing basis, this to me looks like a short setup for the next support down here would be like 83, and then it potentially, you know, could get a lot worse down to 80 pretty fast. So this is not one that you definitely would not want to trade this long, and I would not short it unless you start getting on a kind of a closing basis separation and a close below this 85 level. You can see here on the daily time frame, we've got another what we call this volatility squeeze. So these can present kind of a coiled type price action, and then a very big explosive move either up or down. We've got the 200-day moving average right here at 88. So it's got massive overhead resistance. But if it did break through this 200 and, you know, back above that 90, you could get some positive movement to the upside. But all in all here, it's nothing that you'd want to trade as far as taking a shot to the long side. And like I said, I'll be looking to, if it starts to separate on a closing basis below that 85 level, then I would look to take a short action on this trade for a move further down to potentially right here. You can see if it breaks 85, could easily get back down to these prior swing lows, if, you know, call it 80 down to 77.
All right. It's interesting that we have a different approach, Larry, but we are identifying some of the same exact key levels in the market. I find that really interesting. Oliver, what do you think?
Okay, yeah, obviously the major driver here was the last earnings event here on the 20th of February, so a little bit later in the earnings cycle, so we won't be seeing the next earnings news until May. and we were down 10% on earnings day in the following main trading session. And that pretty much closed down in the lows. I mean, 0.01% down from the session low on pretty big volume, 600, so over 6 times normalized volume. And we're still trading for the quarter at 45% higher than we usually trade, so down another 7.2%. So typically when you see a strong move like this that is triggered by an earnings event, it kind of runs out of steam the closer you get to the next earnings event. So it would take a pretty major new event here before the end of May to keep that slide going at the same speed here. Not to say that it couldn't, continue to decline down here, but I think from a velocity point of view, it was already a pretty fast, pretty aggressive move here. 17.5% here in about 9 weeks? We'll be watching what kind of news are coming out before the next earnings date, but if there's nothing major, then definitely watch out for the next earnings date. And if it's positive, I wouldn't rule out a explosive move on the upside again.
All right, well, that's interesting. And you both made some comments that line up with what I'm observing on the chart here. So I'm showing the daily chart on Walmart. And this was big wave 3, big impulsive move. And this correction has been a perfect wave 4. And just as Larry noted, we're right under the 200, and that could be some significant overhead resistance. And if we break through it, that could have real meaning in terms of another move up. What Oliver said it, I think he said velocity, but this down move, if you look at the curve of it, it's like this, right? The momentum is definitely coming out of it. The price oscillator is showing that as it's losing steam here as well. So this was actually a perfect correction into a Fibonacci zone between these 2 blue lines. So that is exactly what we expect to happen after a big impulsive move like this up. And so then the next expected move would be a resumption of that original trend at some point. And earnings could be that catalyst, but we have to see it break through that pretty significant resistance of the 200. It's this white line. So if we get up through that, and this cloud would probably start thinning, and eventually we want to see price work its way up. And there might be a long opportunity coming up somewhere in here when it really gets fully proven, and that's worth waiting for. You don't want to just jump in prematurely. You want to make sure it's proven, and there's plenty of room, right? If this trend really does resume, then the Fibonacci retracements take it up to 117 to 137. So it's yet another wait and watch, but it could be very interesting. I think the downside potential on this, it could go down. I think Larry said, hey, if this continues, down around 80, I think was your level, and that's about where I've got it to, the bottom end of this retracement zone. It certainly could continue. But what it does next right here is important, and earnings will probably be the catalyst for that coming up here. Well, we've been through 5 symbols, and we've offered our analysis on those. Why don't we deviate from the list for a minute and share a trade that's on our radar screen, each of us individually, something we like, either we're in right now and there's still maybe time for viewers to get in, or something we're watching very carefully, looking for some kind of entry criteria on. So Larry, what do you got that you like?
Well, one thing that we looked at and set up today was a trade set up actually for Facebook. And so looking at Facebook, the potential target up here to possibly 170. And one way to play that, we were looking for a way to play that where it could be very defensive in case it rolls back over. So we were looking at just a kind of what we call a wide wing butterfly to target 170. So this was like doing a 165, 170, 175 call butterfly, and you get into that for about $1.20, $1.22, looking for a push up here to 170 by this Friday. So very short duration on the trade, just looking for a pop follow through to see if we can get to that area. And this is something that you can also defend by selling another bear call credit spread. So we could, tomorrow, if this starts to fade on us, we could sell another bear call credit spread here, converting this to what we call a ratio butterfly. So kind of here's what it would look like if you look at the risk profile graph. So wide wing butterfly here. If we get any movement the next couple of days, this thing can make some pretty good money. And the closer you get to expiration on Friday and it's up here, it can make some really, positive return. But if it does start to fade, what we could do is sell another 170, 175 call credit spread against it, shifting our risk down to only, about $60, and then play it from there. So kind of a trade for a little bit more upside movement on Facebook with the butterfly.
All right. Trading Facebook, trading the volatility on Facebook, right?
Yeah.
All right. Oliver, what do you like?
Okay, this morning had a coaching call with one of our members, a very nice gentleman from Missouri, and we were talking about it just as we started the call. Hershey hit with a sell signal here. Analysts at UBS downgraded it from a sell to a neutral, and we were going over that trade, and for sure closed down. I think we were at somewhere right around here in the 96.54 area when I had the call. So went down to, what did we close on? 96.17, I think. Well, 95.86. So that's a good example, and that happened, as I was on the call, and we were analyzing all the various things on here, how the signal generated, and how the volume impact kept going up here and closed on 3.4 times the volume. That's the kind of action you want to see. 2.3 million shares. So that's a play I would consider on the downside here. And I guess the next earnings will be first week of May.
Okay. Very good. Hershey. So I'm showing a trade that most people never heard of, I'll bet. It's symbol TNDM, Tandem Diabetic Care Incorporated. And this is one of the kind of trades and the setups I love, where this thing fell out of the sky. It was over $80, and it had a huge sell-off down to about $2, and then channeled for months, and then started breaking out of that channel. We waited for some good confirmation, and it got past this gap, make sure we weren't just filling that gap. And so we took a long on this at 503 on March 29th. And it was going our way. It was doing good. We were in about 20% profit on the trade. And then news came out today on Tandem, and they beat earnings, and up 25%, 24, don't want to exaggerate, 24% today. And we had actually scaled in yesterday. We added to the position as it was heading up. And so we're sitting here over 40% profit on this trade, and we're in it, 10 calendar days, 11 calendar days. So this one's a home run, and it's really cool. We're going to take some profit on this tomorrow. It's a little late to be getting in this. I got a price target at 884, and it could go higher than that. That was a conservative target, but a little late to get in. But I just had to share that this is one of my favorite trade setups, and it absolutely worked out. A new trade I'm looking at right now, and hoping to get into tomorrow, and that's gold. Gold is I'm analyzing gold on a 60-minute chart, and let me get my scale set up correctly here. So this is the impulsive move. This is the correction. So it's been volatile, but it really is showing evidence in terms of higher highs, higher lows, higher highs, positive momentum, and the wave count all lines up. that gold futures looks like we could get a pretty good move with the target zone at the top, 1872. And so I expect to be in that. Probably going to take an entry tomorrow if it holds up. And I'll trade it with the GLD. I like looking at the futures contract that trades around the clock. There's more data here. But I'll trade it with the ETF GLD, and we'll just go buy some deep in the money, high delta call options on this and let that maybe run for a week or two. And I think we'll get some pretty good return. No guarantee, but the setup's looking pretty good to me. So I like gold right now. All right, back to the list. Let's see what we can keep doing here. Next up, Baba. Everybody likes to talk about Alibaba. You like talking about it, Larry?
Sometimes. If it looks like a good setup, I love Alibaba because it's really nice and liquid. Great options on Alibaba. It's a really good one to trade. So I do like it. Now, as far as looking at what we're currently looking at, it's had a big sell-off. A lot of this got backlash off the China, U.S. trade war potential, and hurting Chinese stocks, et cetera. So it got hammered pretty good. You can see that it's got a lot of overhead resistance. So this is a hard one to trade because of this just massive clusters of moving average resistance. It did finally today get back above the 200-day moving average here. And we're starting to get a little bit of positive momentum, but it's one that I would just kind of probably have to fade, not really look. I mean, there are other things out there that look better to trade right now. So you've got, like I said, a lot of overhead resistance, a lot of Fibonacci levels, and it's just one I think that'll have a lot of hard going to the upside. But it looks poised to push and have a retracement short covering rally, which could be still a great trade. I mean, it went out at 176, and it could easily retrace back up here to 185 in this level right here. So still, potential to make some big money, but from a longer term trend trade type setup, it's going to have a lot of resistance to the upside.
All right, I'll hold my comments, but as usual, we're in a bit of agreement there. All right, Oliver.
Pretty low impact news here. If you look at, as I'm scrolling down here, nothing really sticks out other than one CNN article here. 4.33% on 153%, but it came, in the after hours. So that caused some spike in volume during the after hour session here. If you look at what happened on the analyst actions side here, everything low impact. The last time we had like a medium trigger was on the 2nd of February, and that was a down move on an upgrade. So really completely the opposite what you typically see. And then if you look at the SEC filings here, also a couple of medium items here, but and earnings wise, you've pretty much seen 3 out of the last 4 earning events, even though they beat earnings, stock sold off. And let's just zoom into the last one in here. Down 4% and 240% volume impact since then, down 11.6%. So not seeing any major news events here that could push the stock up here right now.
So that's interesting. Does your software, Alibaba could be sensitive to country news. Does it pick up country news for a stock like Alibaba, or just company?
We go with company specific news. We've done a lot of testing. If an article mentions the company, then yes, we do take it into consideration. But general news, we wouldn't rank on all the stocks from a particular country or market. So yeah, company specific news events is what we specialize in.
Okay. I'm showing Alibaba here, and what's interesting is it looks for the world like a downtrend has begun. As Larry said, it's been beat up lately, and like I was showing on a couple previous charts, right? An uptrend is marked by higher highs, higher lows, and what we got here now is something very different, with a pretty significant low, a lower high did not go on to a new high, and now a lower low going below this level here. My drawing's pretty pathetic, but low, lower high, new low. That right there is the definition of a trend change according to Dow theory. And it happened right as it broke the 200 moving average and as we had growing negative momentum. So it did go back up today above the 200. If we see a pretty quick reversal and heading back down, I think there's a pretty nice short into this retracement zone on Alibaba. So not the same, I think, as Larry's analysis, but we shared some components of our analysis there. So that's interesting overall. Next up, so I'm looking for a short on Alibaba, was the short thing there. FedEx. Yeah, let's look at FedEx.
All right. Yeah, one more thing on Alibaba, though. If you like you said, if it breaks into kind of a closing basis, if it starts breaking through these lows here, 166, you can just see, I kind of call that open prairie. It's just void of support below.
Absolutely. Yeah, so look out below.
Good one to watch if it fails and can't retrace much. This is definitely a great looking trade for a short. And the other big thing here, you can see these little dots. This is what we've got programmed into our system that defines a volatility squeeze. And this is a weekly volatility squeeze. So they can have powerful momentum. So I would definitely be all over this, watching this very closely on a break of like this 166, 165 level. You could have really good momentum to the downside. All right, sorry. So I saw that after looking at it in more detail. And then let's get a look at FTX. This is kind of a no trade here. You've got the weekly. You can see how it's really big sell-off. And it's now, below these moving averages, below the clusters of moving averages. You've got the 8 exponential moving down. You've got it crossing the 21. You got this cluster of moving averages on the daily. So, again, it's going to be kind of a trapped security here with a lot of overhead resistance. So it needs to really kind of start clearing back above this 242 level, and then it could potentially get poised back up to 255. But, I think there are other better trades out here than to be looking at this. So kind of a no trade right now. And I'd be looking, you can see here's the 200-day moving average right here. So it bounced off of that, but it's not getting much of a bounce. So it could come back down here and retest that moving average at 230. If it breaks this 230, then, there's some more downside. See, Alibaba, if you compare the two, it looks like a much better potential trade setup for a downside move. So this is just kind of a chop. I'm not really too keen on doing anything with this.
Okay. I always want to follow up with my comments, but I'm go in order. Oliver.
Chop on the earnings side here as well. They beat earnings on the 20th of March here, and chop. You see, first, stock goes up a little, then stock goes down again. It retraces back to right where it was before the earnings, and all of it in less than 24 hours, moves back down. And yeah, the maximum up was 2%. The maximum down was 3.89, and it closed almost, at the lows here, and then kept actually moving lower here, over 10% down from the earnings price, and now we're back at 7%. So some chop, and you see. I think it was 3 out of the past. Let me just check here. Yeah, 3 out of the past 4 earnings events in the past year hit an opposite reaction. So they beat earnings, stock goes down. That was the March event here. Then the December event, they miss earnings, stock goes up a little. The one before that, beat earnings, and that's actually in the usual direction. Stock moves up, and then in September they missed earnings, and stock moves up. So it's chop for the past year here in our system.
It's so interesting as you walk through those earnings responses, Oliver. It just reminds me, makes me smile. I'm so glad to be a technical trader. Good earnings report, it goes down. Bad earnings report, it goes up. You just got to be pulling your hair out if you're doing fundamental analysis. Because it's all about sentiment. And, the good results weren't good enough. The bad results weren't that.
Exactly. But the good news here is history repeats itself over time. You can pretty much nail it down with 65, 70, 75% accuracy, which ones, react in a certain way, and then take advantage of it. And it's pretty cool if you know how to do it. And if you have a machine crunching all the numbers, it's the way to go.
Absolutely. And I am not a fundamental trader, but I pay attention to information and what's going on in the news and the economy and all that kind of stuff, and it draws my attention to particular stocks or sectors to then go apply technical analysis. As we think about FedEx, I don't know if anybody else has noticed, it's not in the news, but the price of gas and diesel at the pump, man, it's up fairly dramatically. It's up at a multi-year high right now, at least in our region it is. And a company like FedEx, it draws my attention and go, well, they can't raise prices as fast as the price of gas goes up. Would that begin to affect them and their earnings? I wonder. And I'm not going to trade based on that. And then I start thinking about airlines and other things. It's just an interesting thesis that then needs to be proven or disproven with technical analysis. But I look at FedEx, the chart. It's had an impulsive run up, a bullish run for a couple of years, and it's been a little choppy, a little hard to trade, but it is definitely losing momentum, lost positive momentum, gaining negative momentum, resting at the 200, and a break here could have meaning. This would be a tough one to trade, and if this heads down, there's probably others in the sector that might be better to trade, because this one is pretty choppy. And the retracement into these blue lines isn't that big. There's not a lot of profit potential. But if it definitively breaks the 200 and closes below it, there's a pretty good probability it's going to land down into this retracement zone, I think. Again, the question is, would there be enough profit in that move to make it worthwhile versus the risk of the trade? And we don't know that till the setup is in front of us and can measure, where would the stop be? What would the risk be? What's the target? What's the reward potential? So I do think there's a better than even chance of FedEx heading down lower than it is now. I think we've got time for one or two more. So Netflix. All right.
Yeah, so Netflix here. Netflix has been one that's really been good for trending into earnings, and it's got earnings coming up, I guess, next week. You can see that, it's had a pretty good pullback as well, and broke down and came into kind of some support right through here at 275 down below. So we're getting set up for earnings coming up here, and you can see that we're starting to turn a little bit back to the upside with momentum. So from a trade standpoint going into earnings, I am looking for this to possibly push a little bit higher. You can see it's getting back over this 21 exponential moving average here. We're getting on the 4-hour a little positive momentum, but, it's got some overhead resistance there. But, I could see this one pushing a little bit higher. We could put our Fibonacci levels in here kind of from this swing high to low, kind of get a better feel, better idea of where it possibly could go from a retracement back up. And so we'll just kind of look at that swing high to low here. And we're at the 50%. So we're going to have a kind of, that would be your first target, 303, and then possibly up to 311. earnings coming up, so I could see it trending a little bit into earnings, but doesn't look as good as it has in the past, but still potential for it to get a little bit more of a pop. And if you get the broad markets getting a little bit more of a pop, this will, obviously go along with it. It got definitely caught up in the down move of the broad market. So it's not, in the past, it's kind of been a separate stock. It kind of did its own thing a lot of times. And now it's not doing that. It's getting caught up with the broad market. So it's not as easy of a long trade as it used to be. So that's kind of my take on Netflix.
Okay. Oh.
So the last earnings was just a inline here, and investors just gave a really, really bullish response here, up 10% on the earnings dates. That was on the 22nd and the 22nd of January, and the after hour session here, 3.5 times usual volume. And very, very nice, consistent move after that. A little bit of a retracement within a week or two, and then new highs. It's one of those, stocks. It's a brand name that people just are in love with, and even if the earnings, aren't super great, they're looking for the positive things in there, and stocks keeps trumping. They created a great brand, and you see it with the reaction of news. It's definitely a lot different than some other companies out there that don't have the same consumer laugh out there.
All right. That seems like a recession-proof company too, right?
Yeah. I mean, people want to watch stuff, and the trend goes further away from, if you look at all the cable network disconnectors. And if I look among my personal friends, more and more are cutting their direct TV dishes, moving to cheaper online subscriptions, and then adding Netflix on top of it. So I think they're in a great area to be in.
Yeah, and if recession hits, maybe you won't buy an RV, you won't go on a big vacation, but you can pay your $9 and stay home and watch reruns of Breaking Bad, right?
Yeah, and then that deal they did with T-Mobile, where certain subscribers get it for free, and then they're now using an upgrade pitch here, trying to get you pay $4 for the more premium stuff with more simultaneous views and stuff. I think that's how they'll be able to get the average revenues up further without signing up a whole ton new subscribers.
Yeah, so they got a great business model. In terms of a trade right now, it's been an amazing run. It's been huge. Pulled back to the cloud. It found support. I would not try to short it here at a support level, and I wouldn't trade it going into earnings. And it's got some resistance areas as well. So for me, it's kind of stuck in the middle in terms of there's not really a great trade setup in terms of my criteria that I'm looking for. Phenomenal company, great trend, just not currently tradable for me. And that, oh wow, we're up against the end here. So let's go ahead, each person, if you got some closing thoughts and maybe a link or a web page you wanted to share as we go ahead and wrap it up, and we'll roll back to you, Larry, for your closing thoughts here.
Yeah, I think we're trapped in a lot of uncertainty in the markets right now, so you have to be very specific on your trade selections and everything. So this was a really good exercise here today to go through these various stocks, kind of see what you're looking for. And I like to be, really define risk in with options. A lot of different ways that you can set these trades up where you have very defined low risk, and that's what I'm looking at right now. So we're into a lot of uncertainty here. Keep your liquidities smaller and be hedged on your trades, and go from there. Now, if you'd like to come learn more about the way we do trading as far as directional with options, come visit us at PowerCycleTrading.com, and got a lot of good free content on the site, and come join us. So appreciate the invite here today, and look forward to the next one. So thanks, guys.
All right, Power Cycle Trading. Is that you, Larry, in the picture with the cape?
That's me, man.
There we go. Super Larry. All right. Oliver, closing thoughts.
Okay, yeah, thanks again for having me. I want to thank everybody for listening in. If you want to check out, we post one news trade idea every day. Check them out at blog.newsquantified.com. You can opt in for instant alerts or weekly digest. So one idea a day. And if you want to learn more, we do weekly webinars. Just check it out, hear the full story, and hope to see you on the inside. Thanks a lot.
All right. Hey, good to be back on with you again as well, Oliver. And again, I'm Dean Jenkins, followmetrades.com. This is my website. And, you can come check it out. I got my multi-year performance record posted here. I believe in complete transparency. So these green buttons, you can see the details of the trades of last several years, good, the bad, the ugly. And I got a free newsletter. It's a great way to get started. Weekly analysis of the market. I analyze the S&P 500, gold, and oil, and anything interesting going on beyond that. So free newsletter, Beyond the Noise. And again, I do run a stock pick advisory service, trading room, and have several training courses and mentoring. All right. Hey, good to be here with Larry, with Oliver. It's always fun with you guys, and I enjoyed it. Thank you, viewers, for tuning in to hear our analysis, our ideas. And back to you, David, to wrap it up. And thanks for having me again.
All right. Thanks, guys. Just want to remind everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. And be sure to join us next week for both shows. Crowd Forecast News on April 16th at 1 p.m. Eastern Time. And the next episode of this show, Analyze Your Trade, April 17th, Tuesday, 4:30 p.m. Eastern Time. Got a bunch of people on the lineup for next week. Simon Klein, Kristen Fromhertz, Stephen Brooks, Dave Landry, Evan McDaniel will be a first-time guest on AYT. Jim Kenny, Roy Swanson, and AJ Brown so far. It's on the lineup for next week. Also, if you haven't heard of this yet, the Wealth 365 event is going on. And that's where about 70 different financial educators are giving presentations on a large range of topics. I think, Oliver, you said you did one yesterday, and I think...
Yeah, 12 o'clock was great. I mean, a lot of people in the room, great audience, great information. I mean, it was a fantastic event.
And Larry's doing one tomorrow, right?
Yeah, I'll be doing tomorrow at 9 a.m. Central.
Okay. Yeah, so everyone, be sure to check that out. If you haven't heard of that yet, you can go to TimingResearch.com, and I have some links on my site to the Wealth 365 event. So be sure to check that out. And just want to thank my guests again for this week: Larry Gaines of PowerCycleTrading.com, Oliver Schmalholz of NewsQuantified.com, and Dean Jenkins of FollowMeTrades.com. Thanks, guys.
All right, thanks.
Thanks again.
Thanks for that.